Okay, students, so your doubt is what is included in the scope? Like every chapter starts with the scope. Like particular, if you look into, okay, my point is something similar, simple. See, what I teach you is looking into the past examination questions. Like if in the 11 attempts they have asked it, I will tell you, because it's highly probable the new syllabus also. If it not come, that does not mean it will not come. But if it comes also, the amount or quantity is very small. It's a 5 or 10 mark question only. Followed, no? So you can take a risk there. You can academically study it when after you finish this subject and all other 6 subjects. If the time is going to permit you, you study whatever you want. I am not telling you, but give priority to 6 subjects first. In 6 subjects also, what you need for exam right now, or when you are writing exam, those things you need to consider. Okay, point number 2, what does that scope consist of? Scope tells what is included, what is not included. Say for example, you have taken a lease, premises on lease. Do you have got and that lease, no, next 10 years you cannot cancel that lease. Followed, no? Every month or every year you have to pay 1 lakh rupees as a lease rent. Do you have contractual obligation to pay cash? You have got a contractual. Can you avoid it? Next 10 years, every year, whether you use the premises, you don't use the premises, because you cannot cancel that lease. Next 10 years, you have to pay the lease. Now, what you will say? You say it's a financial liability. Followed, no? But scope says, yeah, it's a financial liability, but you consider the treatment told as per Ind AS 116. Even though it's a financial liability, 109, we will not touch that. Now, what that need to be done? When the remeasurement should happen? If the remeasurement should happen, should we recognize the profit or loss? We will not discuss in 109. We will discuss nature same, but we will discuss in 150. Revenue related, some customer advances will come. You say, sir, it is a financial asset or whatever, non-financial. Standard says no. Go in 115, you read that. Followed, no? So when you read the scope, scope tells you in this particular standard what all things we are going to discuss, what all things we are going to explore. Like there can be one government related grant can be there. You say, sir, this is also my financial asset. But the standard says, look, this is a government grant. No, Ind AS 20 we will talk. 109 we will not talk. But you see the same flavor. The way they account here versus way they account this is the same. You're clear, no? So scope and all, again, I am told you, first you pay priority to what I teach. My concept book should be there in your mind. After you finish all, and in the meantime, see, there are theoretical questions when I discuss, no? At the same time, I'll share you the soft copy of the theoretical book. There's some theory for self-study is there. Please read that theory for self-study. And if at all anything comes to your mind, sir, this is exam, looks like it will come for exam, please tell me, so that I can shift it from self-study into that examination thing. Followed, no? Theoretical questions I have given 2 categories. So once I finish Ind AS, you study that self-study, enough. And after all the standards, then you open your study material and go through the study material to see what I have taught. Is there anything left? Is there anything you may come? I'm not covering 100%. Okay, 100% will take 200, 300 hours. Okay, my objective is to complete within 150 hours. But by looking at it, no, you get the flow. You understand what they are trying to tell. This is my confidence. Okay, no? Yeah. Yes. So now we will move on to the accounting of the financial assets. Is the illustration number 25 of your study material, new study material. A Limited has made an interest-free security deposit of 10 lakhs. When right now? They have given you the detail. When they made? On 1st of April 2011. And when the deposit is going to finish now? 2006. How many years? Life is 5 years. Why? For a lease. Now the total lease period, okay, how much is the discount rate? See the word used, the moment you see the discount rate, you need to understand that this must be an off market, because if this was carrying an interest, they would have said interest rate that deposit would have paid. So you have to make an assumption here. See, it's the subject matter of an assumption that this deposit must be interest free. Have they? They said no here. Why assumption? That this discount is something. Say they may give you in different ways. Be careful in the examination question. I am much considerate for you. I will give you in a very plain, simple language. This is off market, but they may not tell that. You have to figure out that this must be an off market. So security deposit redemption amount is how much? 10 lakhs. You paid is the interest fee, no? That's why what you paid is what you're going to get. Present value factor also they have given you. And if they don't give you, then you have to show the calculation, students. Don't straight away write 0.567. You have to tell to ICI evaluator, how did you get this 0.567? You have to keep such minor things in your mind. Now make what they ask. Now comes the business part, very important. Make journal entries for accounting of the deposit in the first year. So simply ask, what is my journal entry? Simple. Did they ask you any analysis, what this is, examine what is sitting here? Nothing. Then they said, assume the market rate of interest deposit for the similar period is 12% per annum. Then you understand, oh, this discount rate is nothing but this expectation. That means if you have kept a deposit in a bank, you would have got 12%. Follow? Now, can you pass the first year entry? What should be entry? When I should pass the entry? First year and last year. See the Chalugiri there. You have to pass first, not initial recognition. First year, that means on 1st April, then on 31st March 2002, and then 31st March 2006. Followed, no? Catch here. Okay, now this question may come for hardly 4 or 5 marks. It doesn't make sense for you to prepare an amortization schedule and so many lengthy workings. So, can you pass the entry right now? What is my journal entry right now? Initial recognition entry. Debit to bank. How much? Is security deposit a financial asset? Why? Now you got a contractual right to receive the cash. Now at what value you have to recognize the financial asset initially? At fair value. What is fair value? Transaction price is the fair value. That's what you told me. When? When it is at a market terms. Is this instrument at a market term now? No. It's an off market. Then what do you need to do? Then how can you tell me security deposit account debit to bank? Entry is correct, but the measurement is wrong. No. 1 lakh measurement is correct. 2 bank measurement is correct. But the security deposit measurement is wrong. So first thing you do one working note. Right. So start solving along with me. First you do the working note. Initial recognition. Okay, write the heading. I'm going to change the slides. Okay. I'm going to change the slides later. When you practice, you will get the proper slide. So working note number 1. Initial recognition. Now, what is your transaction price? 10 lakhs. What is my fair value minus fair value? Because transaction price gets credited. Fair security deposit gets debited. Okay. Now, what is my calculation? Since there is only one stream of payment of 10 lakhs into this, I'm going to get after 5 years. Its present value factor is 0.567427. What if they would not have given you this? What if they would not have given you? Would you write 0.1567427? Don't write it. Write divided by 1.12 to the power 5. You have to tell them how did you arrive at. This is what I observed of late, recently. Since they gave you, you take that value. You see, anybody is very clear. No? Any country, it need not be an Indian evaluator. German evaluator also will understand what you are trying to do there. So they give that clarity, communicate properly, no, what you know. So how much it comes to? 5,67,430. So 4,32,570 is what? Difference. What you will do with this difference? What is this difference? You say prepaid rent. Why did you say assume that fair value calculation is based on L2 inputs? Simple enough. That much of it. You can write more story. I will show you one more story. There you are going to write all that it's going to give me a right to use the future assets in the future. I have lost the interest. I'll show you in the second question. But an assumption, something like this, very clear. See what you are doing, you are telling it very clearly, this is what I am doing. Sorry? No, because how do I understand this is an off market? Because I have made a 0% interest free deposit, but for similar deposit, I would have got 12% per annum. First question is mine, example, don't consider that. We will, from now onwards, you have to ask me. First question, whatever you tell, you give me an excuse, I will twist the question as per you require. Don't connect my 36C examination questions with this question. These questions can come for exam. So next question when you ask me this. Sir, how did you know this question is off market? Previous question, why you didn't tell me? Followed, no? Example is my language. Now I will give you anything. This is examination language. So I am assuming it's an off market because they said that similar deposit will give me 12%. I am doing interest free deposit. Why? Because I will get a right to use that container or premises. That's why I am treating it as a prepaid rate. So I can write big story also. What basis we consider? Unless if they tell me very clearly in the examination question, I will do that. Else it's my assumption. Generally, I told you, except one question, all question you can treat it as L2. One question we'll discuss, which is that question where we have to consider it as an L1. Otherwise, there is no much. See, again, does the institute really expect you to go to that depth? Not right now. Be conceptually clear that there is an L1, L2, L1 what should I do, L2 what should I do. When you go to real life, then what to do now? Then see, Baba, you are not the one who is the final guy who is signing the balance sheet there. You have got seniors. Seniors have got super seniors. Super seniors have got engagement partners. Engagement partners have senior partners. They are already experienced in things. So for next 5 years, you will be getting trained in a practical world what you are learning theoretical. In fact, this is theoretical. No, who said it's practical? In theory we are learning. No. And can it happen in real life? Such a beautiful question. 1st April I will deposited, 31st March only I got it. In real life it doesn't work like that, Papa. And you see institute how much compassionate about you. Every single question. Acquisition happened on 1st of January, 1st of April. Tell me one acquisition like that. It happens on 28th of February, 14th of March. Real life we have got more complicated problem, but there are professionals who will help us because we will get trained, and after some time, after 5 years, we ourselves will become professionals. So this is a theoretical, virtual type of one scenario. We are virtually trying to imagine what is happening in the real world, and in a simple manner we are learning now. Clear? Yes. And I am telling you, certain problems may come very much complicated in the study material, confusing. Don't run away from it. Easier questions will come in the exam. So you have to learn in this question the concepts, and in the exam see how they will ask you. Okay, what is my journal entry? Tell me, students. They asked me the journal entry, no? Security deposit account, debit, how much? Huh? Gone. See, you make conceptual mistake, I'll give you excuse, and I would love that you should make more and more. But these mistakes, calculation mistakes, putting wrong numbers, that is not acceptable. You have to figure out and set controls for it. 5,67,430. Followed, no? Conceptually you make mistake, is learning for you. Because I don't know, other than conceptual mistake, what learning you can get. Prepaid rent, debit, 4,32,570, and give more clarity if you want, no? Balance sheet, right in the bracket, so that somebody will understand where you are taking. To bank, 10 lakh. Done? Am I done? Narration? Who is going to write? I don't know, institute, whether they will accept it or whether they deduct 1 mark for not having right narration. I don't have their marking scheme. Followed, no? But in foundation, I have seen one pattern. Some question, no, they specifically tell narration not required. In foundation, I have seen. So what I can conclude is the final level, because final level I have not seen, don't write the narrations. So what I can assume it, unless institute tells you don't write narrations, in every single journal entry, please write narration, otherwise it may cost you 1 mark on totality. Followed, no? Write anything, being something. But in my solution, you will not find narration. Followed, no? I am not going to write the narration, except some places. Some places I will write the narration. But when you practice, write being, dash, 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 close, so that you practice it. Okay. Done. When is my next entry? 31st March 2000. And see, no, all questions, no, they will write X. Confusing, irritating. But now none of the examination question has got X. See, they won't make your learning very difficult in the study material, so that you will not understand it, you will not absorb it. They'll put a lot of obstacles for you. You have to cross that. In examination, you feel it's very simple. All your queries, no, are answered in the examination. They will give you proper assumptions, proper things. Okay, it is 2002, X2. If you want, you can write in the dates also. What journal entry should I pass at the end of the first year? Should I prepare an amortization schedule? Generally, I have to prepare an amortization schedule. But otherwise, how do I know what is my interest and all? So on 31st March 2000 X2, my first entry is what? What is my first entry? Security deposit account debit to interest income. Interest income, no. It's a 0%. It's an off market. Can you tell me, students, how much is my interest income? And interest income I will take to P&L. I'll bring a clarity there. Can you tell me how much is my interest income? For this, you have to imagine an amortization schedule. Amortization schedule will start with the opening balance. What is my opening balance of the security deposit? 567,430. On this, multiplied by what rate of interest you are going to charge? EIR. What is my EIR? The discounting interest rate. How much is the discount? So 5,67,427 into, what is your discounting factor? 12%. It's actually an amortization schedule you are preparing. But you don't prepare it. If you want, you can prepare it. It's a time waste for you. Did they ask you why you are preparing then? 68,091. Is there any more question? Prepaid rent you have to amortize now. So you will pass one more entry, rent or lease expense, P&L, debit to prepaid rent. In fact, you can pass one more entry, lease rent to prepaid rent, P&L account debit to lease expense. Actually, see students, to that much of depth we go, no, you please practice that way. Don't write any entries like this, lease expense to prepaid, in bracket P&L. We can take a risk actually. But what institute has generally done, lease expense account debit to prepaid rent, then P&L account debit to lease expense account. Perfect. No doubt, no element of confusion. But this is a shortcut actually. See, you take a judgment there. So how much? How did you get? Did you show it? Then how somebody will understand? So right there, 4,32,573 divided by 5. Being narration, when you give, you do that calculation and show someone. Baba, you are an accountant, you are a communicator to the outside world. If you, in the exam only, if you don't communicate properly, then if after you become a CA and when you have to draft a balance sheet, what communication will you give to the investors? They will get fully confused with your balance sheet. Half of information. So learn that communication here. That's why in FR, presentation has got a marks. In AFM, presentation has got no merit because AFM calculation happens in mind. By looking into calculation, you enter into a deal. FR not like that. Now FR you have to present. So how much is the amount? 86,500. Okay, 15. Okay, whatever, 14 or 15. Then will you pass second year entry? No, waste of time. You can pass, but that for the 4 mark, no, it is a waste of time. Will you prepare amortization schedule? No. Now what they asked me? Last year entry. Okay, write the last year entry. What is my last year entry? Same. So I'll write last year entry, 31st March 2006. Security deposit account debit to interest income. Can you tell me, students, what is this amount I need to write? See, if I had prepared an amortization schedule, no, you did not find any problem at all. Like this, you would have seen that schedule, taken that. I've shown the EMI schedule. It's like I'm asking you, what is my third year interest when you pay 200, 200, 200? What is my third year interest? It's like I'm asking that. So can you tell me what is my last year interest? Yes, students, please pause the video and tell me how much interest I should debit last year. Income I should recognize last year. Okay. See, first of all, what was your balance of the loan? 5,67,427. You paid first year, you charged first year interest. Did you pay that? No. Second year will be charged on that also. Second year, third year will be on the cumulative balance. Fourth year will be. So can I say to the power 4 will give me fifth year opening balance into 12% will give me 1,07,143. Yes, what was your logic? Sorry? Okay, understood. No? Now, I wish that you make a lot of mistakes because mistakes will teach you. Everyone, in fact, I was not expecting right answers. I wanted you to make a lot of blunders and mistakes here. Maybe you may be feeling good, okay, when you arrived at the right answer, but actually, I'm feeling bad. I wished you made a mistakes. Why? You learn it. It will imprint on your mind your mistakes. Anyhow, no problem. If you are done good, both are good only. Adadella olita irtide. If there were cash outflows were there, no, then this logic you cannot apply. Since it is a ZCB now, the security deposit is like a ZCB, that's why this logic works. And in the question, they didn't ask you amortization schedule. Otherwise, you prepare an amortization schedule, problem is solved. And what is my last entry? Security deposit, okay, bank account debit. Oh, no, one more entry is there, no, on this day. Lease expense to prepayment, how much? Same story. One more entry is there. Redemption, he will give me, no? So when he gives me, what accounting entry I'll pass? Bank to what? Security deposit. What is the balance? What he gives me? 10 lakhs. To security deposit, I have to de-recognize it, remove it from my balance sheet. On the last day, what is my balance of security deposit in my balance sheet? Same. That is called unwinding. From 5,67,000 every year, if you charge adding 12% on a cumulative basis, at the end of 10th year, you end up getting 10 lakh as a closing balance. So your last entry will be this. So if you would have prepared an amortization schedule, no, things would have been very clear to you. Amortization schedule will start with 1, 2, 3, 4, 5. First opening balance, always start with 1. Na? Institute will start with 0. Don't do that. Confusion. 10 lakh. EIR. What is your EIR? 12%. 1,20,000. Then no cash flow. Closing balance is going to increase. Second year interest, third year interest, fourth year interest. So last year it will become, okay, sorry, not 10 lakh, 5,67,000 something. So accordingly, last year it will become 10 lakh. And you pay that, your amortization schedule finished. Perfect? Confident? Understood very well? So amortization schedule concept is clear to you? What is my EIR? The discounting factor itself is the EIR here, unless the transaction cost comes into picture. Because the moment transaction cost comes into picture, my EIR is going to change. We will discuss that later, not right now. Any doubt anybody is having? Yes, Dhanashri. Now you said you had some doubt. Now tell me, are you clear? Huh? Oh, it was so easy. No problem. You see, no, let me do it. You see, there's financial instrument, why people are creating so much noise about it? You see, it's a so simple chapter as such. Okay, then please solve this. This is an examination question. Okay, students, so please pause the video and do the working. Let us compare the answers. I don't want to read the question. You can read it yourself, no? Okay. See, one thing is, by looking at this question, you understand, oh, this is the same exam, the same study material question. Did you get a feel? Will you touch this question in the exam? Will you do it? Okay, students, I hope you are done. When I asked you a question, will you touch this question? Everybody, Okorolu, every in single voice, yes. Same question, no? Did you see the trap here? See, this is one of the problem in the FR. Okay, in FR, 5-mark question will come for 10 marks. Simple question, 10 marks. One fitting is there. 10-mark question will come for 5 marks. This is also fitting. See, this is a fitting for you. Once you touch, then you realize, Arey Baba, how many journal entries I am sit and run. So this is like a bait. In the name of 4 marks, they make you waste at least 15-20 minutes there. That's why by looking at it, you have to develop a judgment from now onwards. Should I touch this question or should I not touch this question? What is the catch there? Follow, no? The biggest catch here is, in the study material, they said do it for the first year and the last year. And in this question, they said pass the journal entries. They didn't tell also all the years. And the moment you started journal entries, then you realize, Arey Baba, this is going to take time. Journal entries. And what happened? No, something very important, 10-mark question, no, you could not attempt only. So your objective, or take shortcuts there. What is that? Plot all the 5 years in a tabular column. One entry, next one column. See, I cannot guarantee at this point of time whether you are going to get a mark or not, but it's a risk. Chalo, worst case scenario. They don't give you the marks. How much you will lose? 4 marks. How much you will get there? 10 marks. Followed, no? Okay. So first we will start with the not justified for 4 marks. Huh? So clear, no? So first we will calculate this. Have you got this 8,65,000? Yeah, you would have definitely got 1 mark here. Definitely you would have got 1 mark. So that's why your risk is only 3 marks. So what I suggest, you put a tabular form, no? Take a judgment at that point of time. What should I do? Don't see that, okay, I should get 4 out of 4. You will get 4 out of 4, but you will lose 10 out of 10 there. Then, okay, this transaction price 20, present value factor they have given, multiplied with this, you get 11,34,854. Then first initial recognition entry, this you must have got, maybe half mark you must have got for this. So 11,34,000, prepaid rent is 20 lakhs. This didn't ask you anything else. Then amortization schedule I have prepared, but not required, because really this suggested answer they have given to you. Because please don't go with the suggested answer also. Did the question is asking amortization schedule? Not required. So somebody could have done with that previous logic only. Is equal to 1 divided by 1.12 to the power 1 to the power 2. So amortization schedule start with the opening balance into first year interest, no outflow, second year interest on the opening balance, third year interest, like this it will go on. It will come to 20. And from now onwards, you will pass the entry security deposit to interest income. 1,36,183. Did you get this number? Lease expense to prepaid rent. Now, based on this, the same is going to get repeated. Security. See, this is the suggested answer. But what I can suggest, since the entries are same, okay, you can write a debit credit indicator. See, like this, credit 152, 524, negative. 1 year, no. Year 1, 2, 3. Debit is 152, 524, debit. Below this, write credit. In a bracket, in front of this only you write a negative balance. This is what happens in SAP and all. Your Tally, ERP systems. Journal entries will look like this. Follow, no? Take risk. Second year entries you write here. 1,70,827, 1,70,827, finish. If they give, well and good. If they don't give, forget it. But you save time now. So understood who is in ICA? So now this is all the questions, all the years, 4th year you will pass from the amortization schedule, 5th year, and then you pass one separate entry for this. So what your strategy should be, initial recognition entry one separate, end of year, all years consolidated one, and then one last one. And you have got one small calculation. Perfect? Okay. We'll move to the another question. M Limited has made a security deposit whose details are given below. Deposit starting, end date, total lease period, security deposit, present value factor. Determine how the financial asset should be measured and briefly explain the measurement determined as such. Make necessary journal entries accounting of the security deposit in the first year and the last year. Oh, our same original story, study material. But did you see a twist in the original story? What is the twist? Explain. Is a twist. Determine means you are the calculation, which the study material was very silent. They calculated difference is so much. Did they ask you in the exam? In the first part, they didn't ask you. But here they are asking you. Determine means you have to do that calculations. Then explain the measurement as determined such. Then you need to explain that. Okay, your this thing. Make necessary journal entries for accounting of the security deposit in the first year and last year. Assume market is for the similar deposit. This is an off market. Okay, so now how do we do it? Okay, only 1 year and last year journal entry is sufficient. Okay, right, solution. Okay, leave some space, okay, for the previous journal entries, whatever you have started with. It's going to take time now. Previous journal entry, if you want, you leave a space and do in a tabular form for your purpose. In the given case, they asked you explain how do you measure it. In the given case, security deposit is at off market. Hence, we need to calculate fair value. It's an off market. So transaction price I cannot assume to be the fair value. Now, subsequently they asked me first year and last year. Then that means subsequent accounting comes. So for subsequent accounting, what I need? Subsequent. See, they asked me measurement. Which measurement they told? How the above financial assets should be measured. Which measurement they are talking? Initial measurement, subsequent measurement. Initial measurement you told. Look, I am going to initially measure at a fair value by calculating fair value using discount of 9%. 9%, no? You will explain. If they ask you, explain. Will somebody will understand this? How do you initially measure? Now, how do you subsequently measure it? How many subsequent measurements are available for a financial asset? 3. Which all those? Amortized cost, FVOCI, FETP. How do you measure it subsequently? Sorry? I'll keep the same balance. Understand the difference here in this examination question. They asked you, please explain how do you measure it. Now, how do you measure it initially? You say, sir, I will initially measure at a fair value. What is fair value? Transaction price is the fair value. But since it is an off market, I am going to calculate the fair value. Done, finish. Then you determine. This, see, again, don't explain a plain childish type of question. Explain the measurement and determine your fair value. Determine the measurement. That determine measurement means workings. Explain means you have to explain why you are doing that working. So they may jumble up, they may interchange it. So here 2 things are required. One, you have to calculate because they said determine. Second thing, they explain. So explanation should come before calculation or after calculation? Before. How did they ask you? So expect this is what the institute is going to do. So first you start explaining and then you should do doing the calculation. Institute will fool you. Where? Not in the study material, in exam. This exam, no? Exam questions, right? Okay. So, initial measurement you said perfectly. Can you talk about subsequently how should I measure it? Why? See, there are 3 subsequent measurements. Amortized cost, fair value, FETPL, FVOCI. How should I measure it subsequently? Huh? That's what you should tell, no. That's what you have to explain, no, Baba. That's what they are asking you. How do you? Then you need to say, since it involves holding of financial asset or security deposit to collect contractual cash flow. Are you planning to sell it, this security deposit, to somebody like a zero coupon bond at a discount? No, no. You will hold it up to next 3 years or 5 years. So your objective is to hold it, and as PPI test is passed. Now you will ask me, sir, where is interest here? No, but it is assumed to be implicit here. We will discuss in some other place. Why this type of ZCB is going to pass the FCCI test. Therefore, will be measured at amortized cost. Now tell me, students, when somebody reads it in a very plain simple language you have written, look, I am going to initially measure at a fair value is a transaction price is off market terms, so I am going to calculate it. Since my objective is to hold up to collect the contractual cash flows, and it is going to pass my CCFC test, so I am going to classify it at amortized cost. So I am going to prepare the amortization. Is somebody very clear? Is your explanation very clear? Now, if you don't give this explanation, how much this question has come for exam? Huh? 5 marks. How much you will assign to it? How much weightage you will give? Okay, first of all, how many questions are there here? For this 5 marks, how many questions do you find here? 3 questions you will find out. Can you just quickly in your mind give one mark allocation? One mark for the first year and last year journal entry. Maybe 1 mark for this calculation, or I can say 2 mark for the journal entry, 2 mark for the explanation, 1 mark to determine, because determine is not such a big rocket calculation there. It is 1 line calculation. So then you need to understand, or I don't know, maybe 2 marks here, 1 mark for the explanation. But if you don't explain it, my point is simply you are going to lose that 2 marks. If you think this is a calculation, this is what I am trying to tell you, that the theory is sitting in a calculation, which you need to figure out and write that. And writing is not a big deal, no. Okay, so write initial measurement recognition. This theory is written, no? Enough. 1 mark or 2 marks, this theory is more than sufficient. Initial recognition or initial measurement. You can write here initial measurement. Okay, we'll keep the same heading, initial measurement. Simple, no? We understand what is initial measurement. So what is my transaction price? 20 lakhs minus fair value 20 lakhs into 0.6499 present value annuity factor, because this I am going to get at the end of the 5th or 3rd, whatever, which year? 5th year. 12,99,800. So 7,200,000 is my what? Prepaid rent. If you want, you can explain more now. What is this prepaid rent? How you are going to treat this? But look at the marks and limit your explanation. For 5 marks, it's not worth to explain what is the prepaid rent. But if the same question they will ask you for 8 marks, then explain why you are treating it as a prepaid rent. Then you should say it is assumed that it is an L2 input, that you are going to get the benefit, and then explain it. So first part of the question is done. Second, they asked you, okay, they have prepared an amortization schedule in the suggested answer. But do I need to prepare? No, in the solution, in the study material I have seen that they just passed 2 entries. So they have prepared, we will need not prepare it. We know one shortcut. What is that now? So we will generally start with the journal entry. Journal entry. See, how do you account and pass journal entry? Both are different questions. How do you account means don't give the journal entries there simply. You have to explain there. So first entry will be initial recognition. Now you write initial recognition. Initial recognition. What calculation working note we did? Initial measurement. So what is my initial recognition entry? Security deposit, debit. How much? 12,99,800. Prepaid rent. You can say ROU. 116 lease ROU. 7,200,000 to bank. 20 lakhs. Yeah. Okay. So they have written some story that subsequently interest is going to be accrued at 9%. We know that. No. That means I need to pass an interest income entry. So at the end of the year, and that they said that they explained that we have to interest income will be accrued at 9% and prepaid expenses will be amortized on a schedule basis. Again, I don't give that much of importance because explanation part we have done that before only. So next is my year end entry. Security deposit account debit to interest income. Can you tell me, students, what is my interest income? We are not prepared amortization schedule here. Sorry, 1,16,982. How did we get this? 11 lakh, no, how much? 12,99,800 into 9%. And then we have got the entry depreciation debit to prepaid rent ROE. Because okay, this entry you may not understand right now. Some students could have written lease expenses account debit to prepaid, one and the same. So if you are treating it as an ROU, okay, question is very silent here. It's an assumption. How much? 1,40,040. The 7,200,000 is there. No, you divide it by 4. Now, what is the difference between the previous question what we did? See, simply they are confusing you. Okay. Now, in a lease 116, there are two types of lease. One is lease, and this is called other than lease. If it is lease, we are going to recognize an asset called ROU, and we are going to charge depreciation. Other than lease is we charge to P&L, lease rent. So at this point of time, we will not break our head. In this solution, what the institute is assuming, the lease is lease as per 116. This is a new concept for you. So that's why, since the question is very silent, if some student would have written here, lease expense P&L to prepaid rent, don't tell in the bracket ROU in that case. I am okay. But if you tell me an entry, lease expense account debit to prepaid rent ROU, then I say it is wrong. Because the word, if you say ROU asset, which is as per Ind AS 116, which we are yet to cover, then the debit should be always depreciation. Why? We will discuss that. So there are two sets of entries possible. If you think that these lease payments are done in line with 116 lease, then this entry. If it is done in line with the normal lease, which is not 116 lease, then lease rent expense account debit to prepaid. Then don't use the word called ROU. And our ICA, different assumptions they will take, different questions in different ways. So you get confused now by looking at what should I do in the examination. Is an assumption. Followed? Okay, what is my fifth year? Last year entry? Year end 5. Deposit will accrue 20 lakhs now, correct? Because we know now deposit is going to accrue. And prepaid lease is fully written off. That prepaid balance, whatever there, every year you are charging, right? So my accounting entry will be security deposit account debit to interest income. How much, students? Since we have not 1,65,227. Okay, round off difference can be there. How did you get this? Whatever opening balance 12 lakh something into 1.09 to the power 4 into 9%. If you have prepared an amortization schedule, what they have done, you could have taken the values from there on straight up. Okay, so this balance, see, last year interest is this. This is an amortization schedule. I hope you are clear, very clear. This is not a rocket science, sir. First of all, I am telling you, don't expect perfection. No, sir, this question should be like this only. No, this is FR, subject matter of an assumption. Develop that ability to take an assumption, to think in a different ways. What they have given, what may be possible. Is it a trap? Depreciation is how much? Same. No headache. And last is bank account debit to security deposit. And going forward, have a learning. Whenever they explain, no, use the word explain. Every journal entry, what you are going to do, you just explain it. So I have given you for your preparation. When you are preparing, no, just write that explanation what they are expecting. If at all this question comes for your exam with the same word called explain. No, this is not required. Just journal entry is okay. Because anyhow, we can take a risk by not entering this thing because we have explained initially everything. But it's better, students, you explain end to end first, how it's going to happen. Whenever the explanation comes, you start with initial measurement, subsequent measurement, up to the loan is going to get closed, or security deposit is going to get closed. So, yes, students, you can pause the video to complete it. Yes, so now next we will move on to the another aspect. That's it. There's only one question and two examination questions. And two questions came in two different ways actually, with the two different sets of traps. Now let us talk about the loans to staff. How to account for a loan to staff. As a part of staff welfare measure, YCO contracted, that means they entered into a contract to lend its employees sum of monies at 5% per annum. Oh, so this is my contractual rate. The amount are to be repaid in 5 equal installments along with the principal. So it is a non-conventional. That means I need one working there, CCF. By looking at the face only, I cannot tell, oh, principal and interest there. The market rate of interest is 10% per annum for comparable loan. What is, by this, what you understand? Of market. Y lent 16 lakhs to employees on 1st of January 2011. Now, see, if it is at the market, then you would have passed an entry, employee loan account debit to bank. Since it's an off market, now your accounting entry is going to change now. You have to calculate the contractual cash flow. Using that, you have to calculate the fair value. Now, you're required to record the entries as at the 31st December 2011. They didn't ask you on 1st January. See. But anyhow, you can always give 1st January entry for the transaction and also compute the value of loan initially to be recognized and amortized cost for all subsequent years. What do you understand with this question? Amortization schedule is to be prepared here. If you don't prepare, you are going to lose the marks. And don't give more than what they ask. If you want, here and there you give. Because see, they said record entries on 31st December 2011. You can give one more entry. 1st January entry also you can give it. You are not going to get anything. Don't expect that they will give you marks. Just give it if you want, because it doesn't take much effort. But record the entries when? Only at the end of the year. Then don't record for all the years. And you see the way they frame the question. Which is my question number 1. Compute the value of the loan initially. It should have been come first. Point number 1. Second, recognize the amortized cost. Because if you have to pass the entries at the end of 31st December, Arre Baba, first you need to calculate this and then you need to calculate this. No. But they will give you a question where they jumble up, they will interchange. So expect that in the exam also. Don't go with what they give. Think what I should do. So first thing is what I need to do. Calculation of the fair value. In fact, I don't need a 2 working. In 1 working only I can calculate. But wait. Wait. What verb they used? Compute fair value or calculate fair value? What is the difference? What is the difference between compute fair value and calculate? Both are same? Sounds same, no? From our childhood. See, if they tell you compute fair value, in your final working, is there any sub-workings required? Yes. Then that should come as a working note number 1. I will tell you. As we proceed further, I will tell you. Otherwise, not required. Followed, no? That working note would not have been required. So, first write working note number 1, calculation of contractual cash flows. CCM, calculation of contractual cash flows. If it was calculate initial recognition, you would have written calculation of fair value, not calculation of CCF. Followed, no? If they would have asked you calculate, you would have written calculation of the fair value. Since you compute fair value, you will write calculation of fair value, because unless you calculate this, how can you compute fair value? You need to contractual cash flows, no? That you discount, right? So you write here year 1, 2, 3, 4, 5. What is your opening balance of the loan? 16 lakh. Is there a slab rate? No. CCF interest is how much? At 5%. 80,000. How much is principal? 3 lakh 20. 16 lakh has to be repaid in 5 equal installments. So how much is total? 3 lakh 20 plus 80, you got 4 lakh. What is your closing balance? Can you tell me closing balance of the loan? Sorry? 16 only it will come. 16 lakh was the opening balance. On this, interest was payable. You paid interest plus you paid the principal also, no? So some portion of principal paid. So closing balance, if I say 1, 2, 3, 4, 5 is equal to 1 minus 3. If you do not have paid interest, then closing balance will be 1 plus 2. Say if principal also not paid, plus whatever, 1 plus 2 is your closing balance. ZCB. In ZCB, there is no payment, no, in between. So it comes to 12 lakh 80,000. Are you clear, students? At the end of 5th year, it is 0. So 12 lakh 80, okay, right now you don't fill this number, because 12 lakh 80 only is going to come here. You just leave it blank. It comes to 64,000. This 32, 3 lakh 20 will be there. So total 3 lakh 84,000. Understood, no? Now do one thing, students. Oh, they have given you the present value factor. I didn't see the question, okay. For the purpose, use the present value factors at 10% rate of interest. So I have to use this only, okay. Now when they have given me this, I have to use these factors only. Okay, so like this you calculate computation. Okay, you can write the theory. Theory is not much important. Working note 1, this is what we are discussing. This is not important, okay, because they asked you to compute there, explain, analyze and all. They didn't ask. Otherwise you would have written this. So just write these numbers, okay. You can fill it later at home. Write these numbers. You understood, no? Because doing this type of calculation, we are going to spend considerable time here. You do it. It is all administrative thing. Now I will tell you, if in the question they would have asked you calculate, then I would have done a future fair value. Discount factor you only have to have written. Multiply with this, I would have got a fair value. Since they asked me compute, this input, I will calculate first, take it to the next step. Vidya, are you clear? Okay. So by not doing this, no, I don't know, students. I feel I am taking risk there in the examination. Maybe step marks I am losing. This may have some step marks. I don't know. See, I am trying to interpret Sometimes I feel like a priest. If I treat ICI as a god, no, God doesn't say anything. A priest has to interpret by looking at the signs and all. So I'm trying to interpret by looking at all this what they have given. No, this may be the case. So whenever they use compute, you do the working note, and next step, do the calculation. Okay, write the heading: computation of fair value, calculation of fair value. So fair value is equal to, now you can do it like this, since they have already given you the present value factor, 4 lakh into 0.909. Already they have given you. If this 0.909 was not given, you should have done 1 divided by 1.10 to the power. Like this you can do. You should tell them how you get it. No, you want to use the present value annuity factor, do one thing, no, do one working note number 2, present value annuity factor. How? They are given you 0.909 plus 0.826 is equal to 3.256. Next, use the annuity factor. So that somebody is very clear how you arrived these numbers. If you find short of time, don't do all these things, sir. Take a judgment there. So if you do this multiplication, 0.909, then what is the second year cash flow? 3,84,000 into 0.826, 3,68,000 into 0.751, 352 into 0.683. So if you multiply, you get 14,06,224. I will tell you one more strategy. Do a presentation like this. Write the heading year, contractual cash flow, present value factor. You plot this, because these two numbers anyhow you have to plot. Don't write this. Use your calculator. Take 4 lakh into 0.909 memory plus. 3,84,000 into 0.826 memory plus. Like this you do memory plus and call a memory recall. Leave it blank. Take risk. Go to the next question. After you solve all the problems, okay, you may get some time, come back and do this administrative job. Because if you initially you sit to do this type of administrative thing, no, you're actually spending time there, not getting time. Chalo, worst case you don't find time. In mind only some numbers, you write some number, no? No need to write actual numbers. Write some number, some approximate number. So that, see, evaluator think. Do you think evaluator will go with these individual numbers? No, he is interested in this number, no, he or she. They say this number you got finished. That is when, if you don't find time. Otherwise, once you get time, do a proper calculations only. But till that time, memory plus. Followed, no? That strategy you can follow. Okay, let us go for the journal entry now. What is my initial recognition entry? Please pass. What is my initial recognition entry? Employee loan account debit how much? $14,06,000. Very good. Why? Because it is at a fair value. Then employee benefit low, employee discount on employee loan, employee benefit expense, balance sheet. How much? Yes, 1,93,000. Yes, students, see everyone, please participate. Try to look and tell me the numbers. This is for your advantage only. You get a hold over it. Another option is you can copy here, whatever I am writing. But when you participate, you will start looking the number. Then you learn better. So I am going to write 16 lakh is outflow. And the discount will be amortized to the P&L account over the term loan or the loan term. That is, on a SLM basis, I am going to discount it. That means I am going to charge it off. Are you clear? Then what they asked me? Okay, actually this was not required, no? This was not required. They didn't ask me the journal entry. Anyhow, I told you, suddenly if you want, you can write, otherwise you can just leave. They didn't ask me. They asked me only last year. What is the second thing they asked me? They didn't use the word called amortization schedule, but they are calling it amortized cost for subsequent years. That means that closing balances we want. That's called amortized cost. So for this, I need to prepare an amortization schedule. Second, amortized cost. Amortized cost. See, always write year. There is no choice for you here. Presentation is always like this. And irrespective of wherever you come across, students, I'm telling you, always write end of the year. One means end of the year. No zero. Institute will put sometimes zero, sometimes they will not put zero. Don't go by that. Always write 1, 2, 3, 4, 5. Then comes the opening balance straight away. What is my opening balance here? 14,06,224. Where did you get this number? From the initial recognition entry. That's why we passed that entry. So that we have got a clarity. Otherwise, I may end up writing some other number there. This should be always this number. This number. Initial fair value. Subject to your transaction cost accounting. Then, what is your EIR? At a 10%. How much it comes to? 1,46,22. That means you should have earned 1,46,22. How much is your CCF? 4 lakh. How much is your closing balance of the loan? Sorry? What is your amortized cost of the loan? If you open the ledger account, what is the closing balance of this loan account? Sorry? 12 lakh? How did you get? That is contractual. That is at different rate, no 5%. So 1 lakh, 14 lakh plus 1 lakh 40 minus 4 lakh, 11 lakh. Okay, 1 minute, just tell me. 11 lakh, 46,846. You need to understand the difference. See, if this was at the market term, then that and this was the same. But since this is at an off market term, your amortization schedule will be totally different from the contractual cash flow schedule. Yes, Swap, if you have got doubt, please practice this. Then this becomes your opening balance of the loan. This is book values, and your first working note. It is not in book record. It is an off book. It is the calculation working note. It is. This is your journal. This is coming from a journal entry now. So 11,46,846. What is your second year interest? 1,14,685. How much is the contractual cash flow? 3,84,000. It becomes 8,77,531. And in fact, 11,84,846 is the present value of all your future cash flows at any point of time. Then 8,70,000 is the present value of the future cash flows. Like this, I will go on doing. At the end of the 5th year, see, this is my status. It should become 0. No, that means there is some mistake in your working. Something you did. And you will get one small minor difference. That difference you need to adjust to the last year interest and give one note that the interest of last year is adjusted for the round off difference. If you don't do this, expect some deduction there in the marks. It's compulsory. And if you get big difference, no, some 25,000 and all, then please recheck your working. This should become 0. Obviously, no, Baba. This came. See, understand the logic here. The opening balance came by discounting this at 10%. So if you unwind the discount, the closing balance should be 0, no? This is the logic. And this is the interest incomes you will recognize in the P&L account. You say, sir, from where interest? Arey Baba, this is what you are trying to hide. No. Yes, students, so please pause the video and do this working. Yes, in the last 2 questions, we were not paying any interest. There was no CCF. It was blank. But here there is a CCF, but it is not exactly 10%. Something. So that we have to deduct. Now I will tell you the beauty of this particular thing. Okay, we'll pass the last year entry now, or first year entry. What is my first year entry? What is my first year entry? End of the first year. This will fetch you mark now. This entry we passed so that I will have a clarity on this number, which you could have calculated also. But the last year is what they have asked now. Oh, sorry, first year end. What is my first year end entry? Employee benefit, employee loan account debit to. Okay, right, third subsequent entry. First employee loan debit to interest income. Did you do it previously? Security deposit also, same story, no? How much? How much? 1,40,622. This is amount. This is accounted. That is contractual cash flow. No, that doesn't get any accounted. That comes as only as a cash. For this interest, we have to look this amortization schedule. This is what I told you. When you say EMI, you told me one simple calculation, sir, 100 rupees interest divided by 3. No, Baba, that is not going to work out. You have to prepare an amortization schedule. From there, you pick the interest. This is the interest you need to account. In the previous two questions, we didn't do it because it was at CB. In our mind only we did because it was very easy. But here we can't do that. No. Here there are different cash flows are coming out. No. Yes, Kriti. Perfect. Confusion, any element. But it is at a market price. It is what it should be at a market price. If I would have done at the fair value, this would have been the status. We should have earned, which I am hiding it. In that I am good. I will show you at the end how the effect comes. This is what I should have earned. But our management is chalu. Some God knows what they are doing. They're reducing my interest income and reducing the salary cost also. And which this loan is given to whom? On director. If the AGM they come to know, no, if I have given this loan to the director, no, director's some nephew I have given, not a related party to us. Now AGM, no, somebody will catch my neck now, asking, who is that nephew? Why you have to give this interest-free loan? Followed, no? Which they would have hidden it, telling 5% interest we got. Okay, this part is clear. What is the second entry? That employee paid me some loan, no? So bank account debit to employee loan because there is a CCF, 4 lakh. In fact, some students can club this into one entry because here loan is debited, here loan is credited. So somebody, by looking at that amortization schedule, if I go back, you can pass one single entry for these two so that the opening balance of the loan will become closing balance. And this is the closing balance, which is the present value of all the future cash flows at 10%. This is the balance present value of all these three. This is the balance present value of all these two. This balance is the present value. You take 3,36,000 into 0.8909. How much you get? 3,36,000 into 0.909. How much you get? 3,36,000 into 0.909. Are you not getting this 3,05,000? That's a fair value. That means anytime you are going to state your this thing at a fair value only, which is intrinsic value. Are you clear? Yes. So now, you could have clubbed this, or you can pass separate entry. Now, prepaid employee expense, that employee benefit expense, I will charge to P&L account in the name of employee benefit expense to discount on loan. How much? 1/5. Yes. Now, yes, we are completely done with the problem. See, if I would have done traditional accounting, first PUC accounting, my balance sheet would have shown staff loan of 16 lakh, interest income would have been 80,000 rupees. But under Ind AS accounting, my staff loan will be 16 lakh, discount will be 1,94,000, and your employee cost is 38,000, and interest income is 1,40,000. See, am I trying to bring this a special loan given to a special person, which was hiding previously? Do you see here? My financial statement was not showing that subsidized loan. But today, my financial statement is representing that subsidized loan. Over a period of 5 years, it doesn't make even 1 rupee here and there, it will not go. The more you recognize cost, the more you interest in the income you recognize. Followed, no? Perfect? Yes. Yes. So we'll take very clear. Any doubts? No, no? Okay, sure. So please read this question and do it yourself. Okay, so this is an examination question in May 23, recent exam. So please read it yourself, interpret it yourself what they are asking. You have a doubt in the previous slide? This is for your academic interest, just to show you. 16. Yeah, but eventually over a period of 5 years, it's a timing difference. That's why deferred tax, when we do Ind AS 112, no, deferred tax is going to come on this now. To create one, all headache, no? Go and tell management, don't enter into off market. Then everybody in the world will do this, everybody will understand this. And that is my Moola mantra. Off market, Ind AS. Market doesn't require any accounting. Please ask me. It is interest, no? If with this loan you would not have given your staff, what would you have done with that money? You would have deposited in a bank, and bank would have given you this extra money. No, this difference between this is actually your opportunity cost. Which, but I would have received it. No, I would have received it. But what I have done, that extra income I have offset here. Otherwise, if I don't give this interest cost, what that employee would have told, sir, please increase my salary. My salary cost would have come here. Okay, previous status would be like this. Salary cost would be 38,000 previously. What I am telling him, no, I will give you interest free loan. I will not pay, I will pay you less salary. And my income would be 1,40,000. Previously it would have been like this. Because of, I am hiding it. You got my point, no? I am not paying him, I am paying him less salary here, less interest I am showing it as an income. But right now, that what I am hiding, no, I will treat it as my employee cost and treat it as my opportunity cost of income interest lost. Yes, I agree with you. I didn't receive any income, but it's actually my loss of income, no. So if you don't want this, don't enter into that transaction. This is what Ind AS wants to tell. If it sounds like a weird to you, do a normal transaction. Why you want to enter into off-market transaction? Employee is a related party. Related party disclosure should come, no. And in the name of employee, you might have given to one director there. Are you clear? Yeah, but this is the rules. Nothing doing. If you don't do this, auditor is going to qualify your audit report. Are you clear? Yes, in reality, actually they are getting 5%, but they are losing no something. Should they not account that? That's what is getting accounted. This is what they are losing. Yes, please pause the video and do this. See, students, one thing, this is a 14-mark question. And what you are seeing, it may be something may come to us as a surprise. But actually concepting. And everybody in India at that point of time, nobody thought about this question, because this question, no, is not there in the study material. Means similar thing we have seen. You see how they have twisted in the examination. Now I want to test how do you react to it. And I'm going to discuss. I want to make it very clear to you. Don't worry. Yes, solve it. Yes, students. So before we proceed into the discussion, okay, I will read this question. First, you are sitting in the examination hall. You saw that Jamnabai is there, Autumn Limited policy of providing the subsidized loan to its employees. Oh, you say already study material, you have seen this question. For personal purpose, whatever purpose, what for us? Is the story now. Mrs. Jamabai, a senior HR manager, took a loan of 12 lakhs. So my transaction price is 12 lakhs. Now this loan is a financial asset for the company. Interest rate is 4%. Sounds like off market. Who gives 4% interest? Loan disbursement is 1st April and the principal amount of the loan should be recorded in 4 equal annual installments commencing from 31st March. Okay, very good. That means from 31st March 2019, 20, 21, 22, 23, 4 years I need to recover equal 3 lakhs each. Same study material question only. But now, see, this is what institute does in the examination question. They brought one twist to it, and they are trying to figure out, have you grasped the previous questions in totality? Or more importantly, when you think, do you think like a student or do you think like a professional there? Do you imagine what must have happened? If you don't imagine, no, your thinking becomes very narrow because you are stuck to procedures. Oh, in classroom, this was not taught to me. You get stuck to it. But if you open up your imagination, you will be able to think better, because entire catch lies in this particular sentence. This is the crux of this problem. In the examination hall, if you are not able to figure out what it is, just leave this question, go to the next question. Because this is like a snake. They will lure you with 14 marks. Probably sometime this can come as a first compulsory question also. But if you touch, students, it's going to bite you. On one side, you will lose 14 marks also. On another side, you have lost time also. And more importantly, you have lost one precious thing. What is that? That's the most precious thing for me in your examination hall, confidence, which you should gain in the first 1.5 hours by doing only those questions which you know very well. You should choose only those questions which you are sure shot you are going to get full marks. And I'm damn sure, I showed previous examination analysis, L1 questions are there, some sort of L2 questions are there without twist. Do that. No, why you are behind this question if you have not understood it very well? Now they said the accumulated interest computed on a reducing balance, obviously, which we have been doing, with a simple interest collected in 3 installments after. Oh, you understand now. Generally, whenever the interest was calculated, along with that 3 lakh, it was also paid. So the arrangement must have been done in such a way. Think like accountant now. What must have happened? Because you are not party to that discussion. So Jamabai must have told, sir, interest I cannot pay. I will pay you 3 lakh. Then when the interest will be left? Is it a zero interest rate? No, 4% you have to pay. When you need to pay? After you finish, you are paying the principal. From 5th year it is going to start. How many installment? 3 installment. You just go there, you find that 4 plus 3, perfect. They have given you the present value factors. But how much is the interest? Now, you asked me this question, sir, is the compound interest or simple interest? I told, please look into the question. Have they told you anything? Yes, they said anything. What did they say? It is simple interest. Again, on interest, don't charge the interest. That means first year interest is how much? On full 12 lakh, you pay 4%. How much it comes to? 48,000. Did you pay anything? 3 lakhs you paid. Second year, how much is the interest? It comes to 36,000. Why? Don't charge into 12% on this again, into 4% on this again. Because what we need to pay, what that Jamabai has to pay to me, is a simple interest, not a compound interest. This is a question you asked me. Followed, no? I told you, please look into the question specifically. If the question is silent here, take an assumption. Then you say that, look, why I should leave the interest on interest. Then you take an assumption, write your assumptions very clearly and say that, look, sir, whatever amortization in schedule, that previous calculation interest was there, that I am going to recover. That means second year interest is not 36,000. It is on 48, also one portion is going to come there. So my first year interest comes to 48, second year 36, 24 and 12. 48, 36, 24, 12. These 4 together is paid from 5th year onwards. Perfect? You got that, no? Somewhere you went there, then you calculation mistakes, no excuse. But see, students, this is what's going to happen in the examination hall. So examination is not just what is taught in the class, what you have practiced. It needs a competency, judgment is required. Should I do this? Should I not do this? Had they given me a twist there? If they have given, what must have happened? Because your stake is 14 marks, no students. Not 14 marks, half an hour. How much time you have taken? Not half an hour. Again, I told you, no confidence. Do you get that feel? Oh, I have done it. It must be correct. Certain questions you get that. By doing it only, you understand, okay, I will get full out of full here. Okay, now Jama mine must remain in service, leave it. Market price is comparative, 9%, no understand it is off market. Present value factors they have given you. See, they are helping you in all the angles. Now one more twist there, one fitting they have added. It is the assumption that no probable future economic benefits except return of the loan is guaranteed. That means, should she stay in the organization? Yes, she should stay. But other than staying, there is no other expectation from her. That means the contractual cash flow test is going to pass. Followed, no? That means what she is going to give me back is the principal and the interest only. That means my SPPI test has passed it. Other things she is not going to give me anything extra. But she has to remain in service. That means I am going to get that. So the prepaid expense will be amortized over next 4 or 7 years. Now, provide the journal entry when at the time of initial recognition, very easy. Calculate the CCF, multiply with the discount factors, you get the fair value, minus your 16 lakh transaction price, you get the initial recognition. And as at 31st March 2000, initial entry, what you need to do? Just amortization schedule you prepare if you want, because they didn't ask you amortization schedule. Take that first year interest. But why you need to prepare that amortization schedule? Because second question they asked to prepare ledger account. Without amortization schedule also I can prepare a ledger account. But if you prepare an amortization schedule, understand amortization schedule and the ledger account are the two sides of the same coin. Both are same. It's the presentation. In amortization schedule, you don't present debit credit. In ledger, you have got a debit by balance, to balance, by account, to account. That you are going to do it. Followed, no? Okay. So first thing we will start with the computation of the interest. Okay. I start with 12 lakh. I'll pay 3 lakhs. This is my CCF, contractual cash flow. How much interest? It is 48, 36, 24, 12 on a simple interest basis. If it's compound interest, then previous workings. Then what is my total interest? You add this 1,20,000. 1,20,000 will be paid in 3 equal installments. So 40, 40, 40. So my total contractual cash flow is 3, 3, 3, 4, 40, 40, 40. Simple. With this, I'm telling you, if you figure out this, you got full 14 out of 40. If you miss here, then rest is the time waste for you. So in the examination, first you figure out, can I do this? No, don't touch it, no. Go to 4B. Then you say, sir, 4, that is a judgment. That's why 15 minutes is given. You are all fortunate people. When I was writing exam, within 3 hours, I have to make a judgment also, solve the problem also. Are you not fortunate? For me, no 1.5 days. Today, there is one general impression. Oh, what I study in 1.5 days is what is going to come. See, Baba, somebody is going to plant in your mind all these stories. If I study in 1.5 day preparation is very important. I agree with it. But don't buy somebody's idea that if I do prepare 1.5 day, then only I can do it exam better. This requires a long-term, earlier preparation. 6 months back only you should start preparing. Followed, no? 1.5 day, it will refresh. It's really important, but don't start a conviction. Belief is fine, but don't get convinced that if I have not done 1.5 day preparation, I cannot do exam well. Followed, no? Because these type of questions come, in 1.5 days, can you prepare for this? This is nowhere, coming from nowhere. So first part is clear, CCF, easy. Please practice it. Second, I will go for initial recognition. How? See, CCF is there, multiply with the present value factors. You get the value. Then they asked me, please prepare the first. Okay, let me prepare the amortization schedule also as a working note. Okay, this is fine, right? So I'll proceed further. I'll prepare an amortization schedule which is not required. See, I will always ignore this. I'll start with the end of the year with the opening balance of 10,43,000. Where did I get this 10,43,000? My fair value. I calculate the interest at 9% because this 10,43,000 I got by discounting all 7-year cash flows. So my amortization should run for 7 years now. So I will take the second year interest, third year interest at the rate of 9%, and my CCF I will take from my previous working notes. At the end I should get nil, otherwise my working is somewhere, then problem is there. I understand there is some mistake. Now the last year I will write down, note that there is some minute difference because of the round off. Followed? Then what should I do? Journal entries. I'll proceed further. So my first journal entry will be loan to prepaid to bank. I'm going to assume it is L2, and since she's staying in the organization, it should have left, and as a recognition of past service, I'm giving this. Then there is no more benefit coming to me. What I will do? Straight away, entire amount you charge to P&L account, no amortization. But since she's going to stay there, she's going to give me service. So I'm going to split it over next 7 years. Until she pay me the interest, she should be there, no? Then 10 lakh 43 is the fair value to bank. Then at the end of the year, loan to Jama by to finance income. How much from where? Amortization schedule. Then she will pay me cash. Bank account debit to Jama by 3 lakhs. And they didn't pass the interest for this, entry for this, but some students could have passed the entry. Employee expense account debit to prepaid expense. Suggested answer, they have not passed. Or I don't know whether I might have missed. Leave it. You can already pass. But now they have asked one beautiful question. Prepare the ledger account. Is it a difficult thing? It's the same amortization schedule you start with by Jama by account debit to bank, 10 lakh 43. Because balance went to the interest account, deferred tax account. At the end of the year, to interest by bank, by balance carried down, to balance brought down. It's a 5 minutes job, no? If you have worked out amortization schedule, but you say, sir, I will not skip amortization schedule, then this may be a 10 minutes job for you. Amortization schedule is what you are used to. This is the only one question in entire RTP, MTP, whatever on earth, where they have asked you ledger account. I don't know subsequently, but previously it was not there. None of the questions it was asked. So they are trying to test you. Have you understood amortization? What is the meaning of amortization schedule? Or you know how to prepare amortization schedule? So if you know how to prepare, it is called a procedural knowledge. If you have understood what is the meaning of amortization schedule, that's called a conceptual knowledge. So they will test you conceptually by asking you prepare a ledger account, which is not a big deal there for someone who have understood it. Followed, no? Yes, nice question. Lovely question. I loved it. Okay, so like this, I'll move on. For all the last year, my balance is going to become 0. Finish. Yes, with this, see, security deposit, we are done. And we have seen the examination variation also, what they will do. Loan to staff also we have seen. There are still more, we will see later. Because if I start telling you now, then you say, sir, what is this? We'll do it later when analysis of the financial statement. The questions will come like accountant made a mistake. How do you account this preference shares? Then you have to give more explanation. But conceptually, same. Next, we will move to the group transaction. Same, financial assets. For this, I want to ask you one question. This is your father. This is you. And this is your cousin. Now, your father pays some money to you. Okay, this is your neighbor's kid. Since neighbor's kid also was there, or your cousin was also there, your father pays some money to the neighbor's kid. Should your father pass one accounting entry? Obviously, no, Baba. Whatever cash outflow, then there is a problem. What accounting entry your father is going to ask? That's my question to you. I will help you with one leg. I say your father says 1 rupee you, 1 rupee your kid, or 1 rupee neighbor. To bank 2. I'll tell you the second leg of the journal entry. I want to know what your parents would have passed the entry for paying 1 rupees to you, 1 rupees to your neighbor's kid. Drawings, where you will take the drawings? Okay, drawings. Okay, is there any ad? Personal expenses, expense. Get into the substance, no, Baba. What it is? Why your parents paid to you? And when they pay to you, are they going to get anything back? Will they get anything back? And when they pay to your neighbor's kid, are they going to get anything back? If they pay you, will they get anything back? Yes, that's the catch, Baba. That's the substance. When the parents give to you, okay, it is an investment from the childhood what is happening on you. It's not an expense. They're spending on your education, including mine. They're spending for your food. Arey Baba, free of cost. Who is going to give me in this world? Is it not their investment on you, or do they treat it as an expense? It's an investment for you. See, obviously, they don't expect that you should give. They're happy if you are happy, if you are self-sustained. They're not spending on you thinking, okay, when I am becoming old, they will give me back. Forget it. No. See, I'm looking at my kid. I'm spending on my kid's education and all. Am I thinking that, okay, once I become old, she will give me? I'm thinking that, look, she should become empowered. She should stand on her own leg. Because that's we wish for, parents wish for. Generally what happens, no? That wish goes like this. It will not go upward. Parents will feel for the kids. Kids will not feel for that parent. I experience. Huh? It happens. That's the psychology. Because when I become parent, when you become parent, you get a different sort of love for your kids, which you may not express that to your parents. It always goes downwards in life. But when your parents paid to the neighbor guy, that neighbor guy has got no emotions. Okay, don't expect anything coming. Once he gets a salary, in first salary, you will go and give to your parents. Will you go and give your neighbor's parent? So that is an expense. L1. This is an amortization, investment. Point? Okay. Keeping this in mind, we'll go into the next question. Because things are going to change now, the way you account.